Big news just hit the banking world. Fifth Third Bank is buying Comerica in a $10.9 billion deal. If that sounds like just another corporate headline, it's not. This might be the beginning of the biggest wave of bank consolidation that we have seen in over a decade. And it's going to affect you, whether you're a small business owner, a regular customer, or an investor trying to understand where this economy is leading. Let's break it down a little bit. What's happening? Why it matters, and what it means for your money. And here's the quick version. Fifth Third, a big regional bank based in Cincinnati, is buying Comerica, another long-standing regional player that's strong in places like Texas, Michigan, California, and Florida. The deal is worth $10.9 billion, all in stock. That means no cash is changing hands. They're just exchanging shares. Once it's done, the combined company will become the 9th largest bank in the US, managing about $288 billion in assets. To put it in perspective, well, this new bank will be bigger than some countries' entire financial systems. The merger is expected to close by early 2026, assuming regulators approve it. Then why is this deal happening? So, why now? Well, because regional banks are under pressure, serious pressure. Interest rates have been high. Costs of running banks or compliance, technology, cybersecurity are going through the roof. And competition from the big four, JP Morgan, Bank of America, Wells Fargo, and Citi, it keeps squeezing the smaller players. But here's the truth. If you're a regional bank and you don't have scale, you are vulnerable. One bad quarter, one market shock, one new fintech competitor, and you are tossed. So this deal is about survival. It's about strength. Fifth Third gets access to Comerica's stronghold in Texas and in Southwest, fast-growing regions with lots of small and mid-sized businesses, while Comerica gets the technology and efficiency of a much bigger partner. In other words, Fifth Bank gets rich, Comerica gets stability. But what does this mean for people like you? Let's talk about the part that actually matters, what this means for you. If you are a customer, well, you might not notice much right now. Your local branch won't change tomorrow. Your app still works. Your accounts are safe. But long term, this is about fewer choices and bigger systems. When small and mid-sized banks merge, competition goes down. That could mean higher fees, fewer personalized services, and less local decision making. Small business owners, well, especially in places like Texas, Arizona, or Michigan, they might feel this the most. Those local lending relationships that you used to count on, well, they might now go through a bigger, slower approval process at corporate headquarters. So yes, efficiency goes up, but connection goes down. If you're an employee in banking, well, this is a double-edged sword for you. Mergers mean consolidation, which usually means layoffs, branch overlaps, duplicated back office roles, redundant departments, they are all at risk. And at the same time, the people who adapt fast, who can manage tech and risk or client portfolios across states, they will be fine. They will be fine. They might even rise faster. Well, the game is really changing. Smaller players are being absorbed, and only the adaptive will thrive. If you're an investor, this is where it gets really interesting. Comerica's stock, ticker symbol CMA, jumped about 11% on the news. Fifth Third stock dropped a bit, because markets always worry about integration risks. But big picture, this deal sends a signal to Wall Street. The era of small regional banks trying to go solo is ending. Mergers are back, scale is back, and investors will start betting on who is next. If this deal goes smoothly, it could trigger a wave of copycat mergers across the country. Banks joining forces to survive the rising costs and regulatory pressure. So, if you are an investor and if you're investing, you might want to keep an eye on other regional names, because this could be the start of something bigger. Why does this really matter? That's an important question. Most people look at banking news and tune out. I'm not a banker, they say. But here's the thing. When banks merge, economies shift. Fewer banks mean less competition for loans. That affects mortgage rates, small businesses lending, startup capital, and even your local job market. It also signals how the financial world is changing. Big tech is moving into payments. Fintechs are automating lending. And the line between bank and app is getting thinner every year. So traditional banks are doing the only thing that they can, getting bigger to stay alive. But that size comes at a cost. More bureaucracy, less human services, and sometimes more risk concentrated in fewer institutions. If 2023 taught us anything, think back to Silicon Valley Bank. Is that even regional banks can shake the entire economy when they stumble. So when you see two mid-sized banks merge into one giant regional player, we are watching power concentrate, and that changes how money moves in America. But your question is, what happens next, right? What happens next? So here's what to watch. Regulators. Will the government approve it? Deals this big always get scrutiny from monopoly risks. Execution. Can they merge two cultures, two systems, two customer bases without chaos? Then layoffs and closures. Yes, expect some branches to shut down, especially in overlapping areas. Then synergies. Well, that's a fancy word for cost cuts. We will see much of it, well, if it's real. If it all goes well, this deal closes by early 2026. If it drags, well, we'll see regulatory pushback or investor pressure. Here's the bottom line though. This isn't just a story about Fifth Third and Comerica. It's a snapshot of where banking and money is going. Fewer players, bigger systems, more tech, less human touch, and a financial world that rewards scale over service. And if you're a business owner, build relationships with multiple banks. Don't rely on just one. If you're a banker, get good at things that tech can't replace. As trust, relationships, human judgment, very important. And if you're an investor, start watching which regional banks might be next in line. And if you're just an everyday customer, pay attention, because every measure like this shapes the system your money lives in. So yeah, Fifth Third, they just bought Comerica for $10.9 billion. But here's the real story. Banking in America is consolidating. And the question isn't who merges next, it's who survives. Because the future of money is no longer local. It's scaled, automated, and centralized. And whether that's good or bad, it depends entirely on what we do next. So what do you think? Are bigger banks safer, or are we just setting up the next big problem? Let me know in the comments below.